Assalamu alaikum, everybody, and very good afternoon, and welcome to this joint event from ACCA and the Centre for Excellence in Responsible Business, SERB, which is part of the Pakistan Business Council. We have collaborated with SERB on many occasions on this particular topic, and it's one that we share as a close value for us in terms of developing sustainable value creation for businesses. Today's event, we've got a number of participants in today's event on the panel. I'm the Regional Head of Policy for ACCA for MISA. We've also got Nazish Shekhar from SERB. She's a Senior Research Associate there. We've got a colleague of mine, Richard Martin. He's the Head of Corporate Reporting at ACCA Global, and he'll be presenting the findings from his most recent piece of research, which is on integrated reporting for the journey so far. We are also joined by two other experts from our local industry. We've got Sahel Sumro, who's the Manager of Corporate Reporting at Atlas Honda Limited. And Atlas are a newcomer to integrated reporting, so that'd be quite exciting to hear from her. And we've also got Amber Tanya Ensari, who's the Senior Manager of Marketing and Corporate Communications at a very well-known company in Pakistan, Engo Corporation. So welcome to all of you, and I hope to be hearing from all of you later on as the presentation goes on. My own message to the audience, we've got 118 people now listening online. On screen, you'll be able to see some links to the presentation itself, which is in a PDF format, both for SERB as well as the ACCA presentation. And later on, you'll be able to add questions in, and we'll be able to see your questions on the right-hand side as you post them. So we'll take all the questions at the very end, and we'll be going through your questions one by one. So just add in your comments and your questions in the box on the right-hand corner as you can see them. Integrated reporting, you know, I think as a professional accountancy body, ACCA has very much historically been focused on financial reporting. So, you know, the raison d'etre of accountants is really to develop and present accurate financial reports. But over the years, we've seen that many companies certainly cannot purely rely upon a financial reporting mechanism to share information on the risks facing stakeholders, as well as how they're creating value for share owners and stakeholders. So beyond financial reporting, I think integrated reporting looks at how we can present a more holistic, if you like, value-adding story of how a company is performing. In Pakistan, we are still yet to really see a broader adoption of integrated reporting, but we're very, very lucky to have with us Amber from Engro, which is probably you know, a trailblazer in terms of integrated reporting here in Pakistan, and they've adopted this perhaps I think 4 years ago. SERB is on a mission, if you like, to ensure that companies in Pakistan adopt sustainable value creation, creating methods, and they adopt a business model that is sustainable, that has a special regard for the environment, social impact, as well as governance. And we partnered with SERB on many occasions to sort of drive the principles of corporate governance and ESG reporting within Pakistan. SERB have done a recent survey on the adoption of integrated reporting, and I'm going to be handing over to Nazish so that she can take us through this survey, which I hope will set the scene for us in a local context. And then after Nazish, we can listen to Richard, and he will sort of share some of the portfolio practices in integrated reporting going on globally. And then we will listen to our two experts from Pakistan as well and ask them some questions around why they are adopting integrated reporting. So I'll hand over to Nazish. Please introduce yourself, and later on we'll hear from Richard and the others. Nazish, can you hear me? Hi, Nazish. The IT gremlins are.
Yeah, continue, and Nazish in the meanwhile will be connected again.
So shall we sort of ad lib a little? We'll allow Richard to make his presentation and come back to Nazish's presentation later. So Richard, let me hand over to you, and I'm sure Nazish will come online straight afterwards.
Yep.
And Nizam, if you could load Richard's presentation, please.
All right. Yeah, I thought. Okay.
Yeah, just a second, please.
Yeah, I just need these. Just need to see things. That's right. Well, thank you, Arif, for that introduction and the opportunity. Really grateful for the opportunity to speak to members in the region about a report that we've put together. It's called Insights into Integrated Reporting 4.0, and that's because it's the fourth in a series that we've done. Looking at how integrated reporting is developing, and particularly with this fourth one, what we thought was we would look back to see what how things have been developing and trends in integrated reporting that we can see taking place. So I need to move on to the next slide. Thank you. Right, which just sets out what we're what I'm just going to cover very briefly, which is that we've been looking at those surveys over 4 years. What we've got is sort of characteristics of the reports. We'll look briefly at that. We'll look at the quality of the reporting that we've seen, and I'll look at 3 specific issues that we looked at this year, which are set out there. So next slide, please. Right, we'll look at the first of those, which is about how this report is developed. The Integrated Reporting Council, who've produced the IR framework, have something called the Business Network, which has I think about 60 companies belong to that network. And one of the things that they offer is that members of the Business Network can have an independent review by experts on integrated reporting, and then they get a tailored and confidential feedback from that review to try and pick out the strengths and weaknesses and areas of development that the reviewers have noticed looking at their report. What we've done is then to take those overall the individual results and assemble an overall picture of what that's showing, based on well, this year it was 48 of the Business Network companies that participated in that. So they offered their report for review, and we've summarized the report. When the reviews are done, essentially what they do is to judge how much they've complied with the framework, and that's done with about 30 separate issues, and that covers the fundamental concepts which Arif mentioned about the multi-capital approach, trying to give a holistic picture of the company's performance based on not just on the financial results, but a wider scorecard and looking at the different capitals. And the different capitals means that it's based around the concept of value rather than to cover those wider capitals. And I think the other fundamental thing about integrated reporting is that it's trying to look at a longer term performance of the company rather than necessarily short term. So it looks at those fundamental concepts. The integrated reporting framework has various guiding principles like relevance, consistency of reporting and so on, and it has various content elements specified that the integrated report should cover. So on strategy, the context in which the business is operating, as well as looking at the risks and so on. So various content elements. And while the reports are being done, we ask them to look at various other characteristics, which we'll look at in a moment. So next slide, please. Right, here we are, just very briefly on so what this report is based on is the integrated reports of 48 companies, and we can see from this that in fact they are predominantly in Europe, but they do cover all of the world is represented to a greater or lesser extent, but Europe is the predominant area where they come from. And the next slide, please. And here we are again in terms of the sectors that they cover, again of dominance by the banking and insurance area, but many other sectors are represented, and we've got an example of that. Next slide, please. Right, we now move on to look at the characteristics of those reports that we've seen over the last 4 years. Next slide, please. Oh gosh, right. Yeah, okay, we've missed out a whole lot of slides, but let me just speak to those very briefly. Okay.
Can you hand over the controls back to Richard?
Yeah, I thought that was what we were going to do, but anyway, what we can see is that the trends over the 4 years. This is picking up a number of items, and that is looking at the at those. Let me just get those up. Yeah. Yeah, sorry about this. Right. Yeah, what we've seen is an increasing extent to which people are using the term integrated reporting among these 48 companies. So we've seen that's risen from about half when we began in 2016. The framework was first launched in 2013. So these 4 years cover really from an early stage of adoption of the framework through to the current position. So it's moved from about half specifically calling them an integrated report to 3/4 that we can see now. And similarly, they report whether they're following the principles of integrated reporting. And we've also seen that the reports are becoming more concise. That's an attribute that integrated reporting wants to develop, and believes that makes reports more accessible, usable by the different stakeholders of the report. So we've seen that those which amount to less than 100 pages have been increasing from about 40% to 57%, and the really long ones over 150 pages again are likewise coming down from 40 to 30%. The other thing we've been tracking is the extent to which there is external assurance provided on the integrated report, and that we've noticed is increasing over the years. So from 46% in 2016 to 2019, 63%. So external assurance beyond what is needed for the audit is becoming the norm in integrated reporting. We noticed that integrated reports often comply with other protocols. So integrated reporting is a framework. It doesn't specify, for example, the sort of metrics that companies should use. It just talks about providing relevant metrics. But other protocols do provide metrics, suggested metrics for different sectors. For example, in the SASB, the Sustainable Accounting Standards Board, and the Global Reporting Initiative, GRI. And we can see it's GRI, which is the most popular of those other protocols among these integrated reporting. The other one we've been watching is the Task Force for Climate-Related Financial Disclosures, and I'll talk more about that later. And then finally, we look at the audience, and audience is very important. Stated audience. If the reports state what audience they are aiming to reach, that has an important influence clearly over the content of the report and what information is provided. And we've seen that increasingly the case. So, and we've also seen that many reports refer to wider stakeholders, and some refer to financial capital providers. So it's in a way quite split between those that are focused entirely on financial capital, their shareholders, creditors, lenders, and those that are aiming in a way at wider stakeholders, society, and so on. So just switching back now to our trends over the last 4 years. Now, not in terms of characteristics, but in terms of the quality of the reporting. And here we've seen that we've got quality of the reporting. Yeah. This is very important, I think, and I think it's a sort of bit of it's quite significant, really. What we've seen over the period is that the quality of the reporting has decreased, and so we look at 2016. Each of the 30 factors of compliance with the framework is measured out of 5, and we can see, yes, the overall average scores for these 48 companies are over the halfway mark, so they're at 3+, but that quality measure overall has been coming down, and so I think it's an important wake-up message to reporters that things that there is scope for improvement. We'll now look at some of the relative rankings, so we need to move on to the next slide, and look at what is done well, what on average is done well, what on average where there's scope for this improvement that I've spoken about. And the first one is on the quality of the reporting. What it does well, businesses do have, in general, communicate well what they do and the environment in which they operate, but sometimes they've struggled a little bit more to capture their business model and particularly describe it in terms of the capitals, the multiple capitals that are such a fundamental characteristic of integrated reporting. So business model, trying to describe complicated businesses on one sheet of paper, generally, which is what they do, with a diagram, is quite challenging. I think probably a lot of the reporters would say that. I would agree with that. But we've noticed that there is room for improvement there. Strategy, generally well discussed, and I think that's important because a lot of corporations may feel that their strategy is quite a sort of quite commercially sensitive to them, and they've been perhaps more reluctant to talk about that than other things in the past, but I think we notice with these 48 leading companies that they are investors want to know what their and other stakeholders want to know what their strategy is, and so it is very important that that is included, and we find that is well done. But I think the problem is that the area that needs to be improved is the link strategy to the multiple capitals, so that their strategy in relation not only to their financial performance, but their strategy in relation to human capital, the natural capital, social capital, the other capitals that integrated report wants to cover. And then also we noticed that there could be improvements in terms of you set the strategy, but I think investors and other stakeholders want to know what the targets you're setting yourself in terms of performance of that strategy, and we don't see that as often as we should, nor indeed the actual performance against targets that might have been set. So next slide, please. Thanks. Okay, and that is very much linked to that performance against the multiple capitals is what is where the improvement is needed, and I think that's so fundamental to the integrated reporting, but that is an area that could be improved on by some companies. Also, we need performance, but we also need to understand that performance and indeed looking forward in terms of risks and opportunities. And again, risks, companies, I think, are becoming more relaxed about talking about the risks that they face to a wider audience, and that is well done. Often, perhaps the opportunities that they see going ahead are not so frequently reported, but that again might be. That may be because of commercial sensitivities about opportunities, but certainly in terms of risks, that's reasonably well done. The other forward-looking information is again an area where more improvement could take place. Better discussion of the outlook, a more transparent discussion of the outlook and the challenges that the company may face in performing in delivering its strategy could be improved. An area where companies are often accused of is in the sort of main reporting space of just talking about the good things and leaving out the bad. I think among these 48 companies, we've noticed that there's reasonable consistency of reporting over time, so that the KPIs are consistently reported, and that general comparability against other companies has improved, and that's important I think in giving the sense that the report is balanced between things that have gone well and things that perhaps are where the company needs to take action. So next slide, please. Thanks. And there are some other things that I think generally easier to tackle, which have been weaker areas in terms of these averages, and that is the explanation of the materiality process they've gone through to determine what the content of the report should be, and the thing that's done least well is a clear statement of responsibility from those charged with governance, so normally the management or the directors of the company, for the report, and that we'll look at in a moment as well. And then just to note that this report, the Integrated Reporting 4.0, particularly in terms of areas where we've identified these are areas where improvements could be made, we're including good examples and practical tips from our earlier reports in these areas that might need to be improved, and so hopefully that's useful for everybody. Okay, next slide, please. Thank you. Okay, and the next one, we've looked at certain specific topics in the report this year, and the first one of those is the boundaries of reporting. So, yep, thank you. The boundaries of the report. Now, this is an interesting area. Often, perhaps not. We've noticed not as well discussed in reports as in these reports as perhaps it should be. Often, companies take a very businesses take a very straightforward view of the boundaries. That is the same as the financial reporting boundary. I'll call it the consolidation boundary for the financial statements, and that's what they use for the integrated report and all the information that's contained there. But I think it is worth looking into because it needn't be as straightforward as it seems, and we've certainly noticed some examples. For instance, the question of joint ventures. Are they included? You may not have full control. It'll be perhaps shared control over the joint venture. Should you include them in what you're reporting to your stakeholders, or should you not? And so we have an example of a platinum company in Impala in South Africa. Does include their joint ventures, but the steel company ArcelorMittal does not, so there can be these complications. But I think more important is when we start looking at some other examples, and here carbon footprint, it becomes more important because carbon footprint and the normal reporting of those is based on 3 scopes: scope 1, scope 2, scope 3. Scope 1 is your own emissions of carbon. Scope 2 includes the emissions from your power sources. So the extent to which you've used electricity or that's been generated using power. And I think let's go on to the next slide. So this issue does become more important, and I think the assumption that the consolidation boundary is what you should be reporting doesn't really fit with the multi-capital approach, where you might be wanting to talk more about the impact on the environment or on your social, on society of your business, and a more sort of end-to-end reporting of your product. So I've used the climate as an example of that, where probably frankly, the consolidation boundary isn't the boundary that should be being used for integrated reporting. So let's look at the case of climate-related disclosures. And what we've noticed is that the recommendations of the Task Force on Climate-Related Financial Disclosures have been significantly taken up by these companies. There's a lot of interest from investors and a lot of support for these recommendations from investors, and certainly regulators around the world are also looking at requiring these. So we've noticed increasing numbers reporting on that. So 1/3 of the reports we looked at this year, for example, did include disclosures based on the TCFD recommendations. But we did notice different examples, and we've given different approaches, and we've given some examples of those in the report. So we look at this bank from Brazil, Itaú Unibanco, and they report in a very concise way, just to say the various issues that they see have been tackled by management, and providing reassurance to their stakeholders that the key issues about their loan portfolio, for example, about the environmental impact of that loan portfolio has been addressed. Another financial sector company, NN, which is a Dutch insurer, they look at the issues raised on climate change, both as an insurer, so they're facing perhaps increased risks from environmental, climate, extreme climate events, but also as an investor and guiding their strategy for their for the investment of their funds to meet their insurance liabilities. A third example here, Wipro, the Indian the Indian computer services company. They look at scope 1 and scope 2, those carbon footprint metrics, and they provide targets for those. Scope 3, they provide the metrics for the and also the mitigations for them. So next slide, please. If we could, yep. And here we look at two other examples. Enel, which is a major electricity provider in Italy. They clearly they have a target which they state to move to zero carbon in due course, and they are linking the climate targets with their management. The management, they report on that management incentives, bonuses are based in part on climate targets. They provide the metrics for the greenhouse gas emissions, and also they provide targets over 3 years. And they're looking at the short, medium, and long term. So interesting disclosures there, which are taking us take us to our final example, Unilever, which is providing the scope 1, scope 2, scope 3 carbon footprint. Interestingly, both with Wipro, but both with Wipro and with Unilever, it's the scope 3 emissions that provide the biggest carbon footprint. So that's, for example, including employees, but it's also including how customers use, for example, the Unilever products, which are consumer food and cleaning products. And they also discuss, and this is a further development we don't see with every company at all. In fact, it's not done enough, which is looking at the financial impact on their business of the different scenarios of global warming. And clearly it is called TCFD, so financial disclosures. It's good to see that some companies are starting to move to that, to tell investors what the potential impact might be, and they look at two of their key products, soybeans and tea. Okay, on we go. Next slide, please. Thanks. And this was an area, as I say, of weak compliance. This is the responsibility statement from directors. It's a thing that the IRC are currently, they have a consultation out, and this is one of the issues that they're looking at and wanting feedback on. It's an area of weak compliance. So many reports have no specific responsibility statement from the directors or the management, and many have a statement that falls well short of the framework's requirements, which are about the degree to which they believe they've provided an overall picture and in compliance with the integrated reporting framework. It's difficult to know why this is so difficult, but I think there are different traditions about signing off reports in different countries. There may be legal considerations we notice, but it is having a specific responsibility statement is an important thing, I think, for investors and other stakeholders to have greater belief and give the reports more credibility, more authority, and what's included in those reports. So it is important, I think, very important, but yeah, why is another why people find it difficult to make these responsibility statements. It's not quite clear, but we do include some good examples which are using different wording, but I think achieve what's needed, which is this responsibility and compliance, degree of compliance with the IR framework. So we include that. Yes, next slide, please. Okay, so I've reached, I think, my conclusion, and looking back, as the IRC's been going 10 years, the framework has been in its full, its existing form for the last 7 years. We're tracking performance over the last 4 years. So, is integrated reporting making progress? Is, I suppose, an interesting, a key thing we were trying to answer, question we were trying to answer in doing this report. Well, I think we can see certainly some areas of progress. Better recognition for the IRC's framework, better recognition for the term integrated reporting, better recognition in the general sort of capital markets and reporting space. The reports are shorter, more concise, and I think that does mean that they're likely to have more impact and more, people are more likely to access and read those reports if they are more concise. There is more external assurance for them, so adding greater credibility. We've noticed the responsibility statement. So the responsibility from management provides, I think, assurance, credibility, external assurance, in addition to the audit, reinforces that, and that is gaining ground and take up. The TCFD recommendations, for example, we do notice that they are improving, as in fact I didn't mention that, as in fact we've seen with the UN's sustainable development goals, the SDGs, are also being reported more frequently. But there are question marks over the general quality of the reporting, and I think we would say at best it's still good, but it is at best not improving, and there is work to be done by these integrated reporters in improving that on average. Some of those issues should be easier to fix, the responsibility statements, in my view, and we could do with. But I think most importantly of the areas that could do with improvement is the better explanation of strategy and performance in terms of the different capitals that are fundamental to integrated reporting, and those are fundamentally about the longer term performance of companies. And we would like to see more forward-looking information included in these reports in terms of targets and outlooks. But I think overall, progress, but still scope for further progress, I suppose, would be the overall summary. Finally, that's really what I wanted to say, but I would just highlight I've provided via the presentation, which you can download, some details of a ACCA learning product that we've developed around integrated reporting, which has 3 levels: a briefing level, a foundation level, and a practitioner level to help corporates, preparers, develop integrated reporting, particularly if they're beginning that. So we've provided some information there that might be of interest to you. But thank you very much for your for this chance to talk about our report, and I'll hand back to Arif now.
Great, thank you very much, Richard, for taking us through that sort of comprehensive report on the journey so far. And like you mentioned, lots of positives coming out, but there are still challenges around quality.
Yep.
And also mainstreaming this as a reporting mechanism. So I think I'll hand over to Nazish now. I hope Nazish's IT challenges have been overcome. Nazish, if you would like to take over and share your survey, And
Okay.
Sahar, I'll get to you. Please hang on. We'll get to some questions for Engro and Atlas Honda a little later on.
Okay. Thank you, Arif. I'm sorry about the issues that I had a little earlier, but hello and welcome to the webinar on behalf of SERB. And I'd just like to give a little background of what SERB is. SERB is an outreach initiative of the Pakistan Business Council, and the Pakistan Business Council is a business advocacy forum composed of the largest businesses, including multinationals that have significant investment in and a long-term commitment to Pakistan. Members' turnover represents 11% of Pakistan's GDP, and they contribute 25% of taxes and 40% of exports. And SERB, as its first outreach initiative, hopes to build capability and capacity of business in Pakistan. SERB's vision is to assist businesses to pursue long-term sustainability and value creation, something that is very linked to integrated reporting. And its mission is to contribute towards inclusive social development. SERB engages with businesses and industry leaders to provide a direction towards conducting responsible business in Pakistan. It leverages private sector growth as a means for development and poverty reduction, taking guidance from the Sustainable Development Goals. So as you can see, a lot of our strategic goals are basically linked to responsible business. And what we've done is that to start off every area of research, we do a baseline survey. And we've done a number of surveys related to environmental stewardship, gender equality, transforming business culture, and ethics. I'd just like to say here the ethics survey we did in collaboration with ACCA. And one survey that we recently did, our last survey was we did in collaboration with UNDP, and that was in which we looked at sustainability reporting practices in listed companies in Pakistan. If somebody could change the slide, I don't seem to have control. So disclosure is a very important aspect at SERB, because obviously whatever somebody measures, it's only then that person can manage. So if a company measures the number of women in their organization, or how many specially able people they have, or the GHG emissions, or the water output, or the energy output, it's only then that he or that company is able to manage that. And as trends are going, we are seeing increasingly, even in Pakistan, there is a requirement that people are asking about water stewardship and energy efficiency, and there's a general trend in companies that they're all reporting this as well. So when we look at it in terms of IR, the Integrated Reporting Council requires basically the framework requires categorizing capitals in 6 areas. And as Richard has already said, these take into account when reporting on performance, and helps provide the company a fuller picture of the way in which it creates value. So the next slide, please. So in our engagement with companies, we've seen that a lot of the things that come under the 6 capitals are already being reported and disclosed by companies. For example, a number of companies are disclosing that the fact that their factories are LEED certified, or they're basically they've used certain construction methods and technologies, or they're using solar energy to generate a lot of their electricity. So that's something that's coming up. And organizational as well, all of these things are normally reported by listed companies, leadership and culture, corporate governance, policies and practices. So what I'm trying to say here is that a lot of the things that are being disclosed are already being disclosed. It's just that they're not being disclosed in this sort of format. So it would be an easy transition for a lot of companies to go towards IR in this sort of way. The next slide, please. So what is SERB's research saying? So the last survey that we did in the last quarter of 2019, and this was a baseline study of sustainable development and SDG reporting among listed companies in Pakistan. So we looked at the PSX listed companies, and what we found is that 40% of companies mention sustainable development in their annual report. So we are at that stage that companies are considering sustainable development. But unfortunately, even in the listed companies, 35% of companies are not reporting on sustainable development. But the good thing is 43% of companies are tracking and measuring their progress and impact and sustainability targets. So you find a mixture that some are reporting, some are not, some are at a starting stage, some are fairly advanced. So there's a large amount, there's a huge range of reporting tactics and disclosures in our listed companies. Next slide, please. Okay, and in terms of disclosure practices, what we found is that in particular related to integrated reporting, we around 9% of the companies that we surveyed are developing their reports into the integrated reporting using the integrated reporting framework. And when you compare it to the results globally, where we use the PwC SDG reporting challenge of 2018, the report, and in that 16% of companies globally are reporting. So in that stage, we're not that far behind, but it is important to say that about 23% of companies are still not reporting. Next slide, please. So when we look at which issues are important to organizations, we find that in terms of the social issues, the ones that are the red, highlighted in red, employee engagement and skill development is a top issue. And whilst obviously population growth, which is not directly linked to organizations, is not such a strong issue. But the indicators here is that a lot of the social issues are important to organizations. And when you look at that in terms of COVID-19, these are the issues that will be important or will now gain a lot of traction in terms of disclosure in the future. And in terms of material and non-financial issues, energy and waste and water are obviously very important. But again, climate change was basically looked at by companies. Only 36% of companies said climate change is an important issue. I think this will change in the future. And again, the COVID-19 crisis will make people think or make companies think more of these risks that are non-financial and that may seem far away to us at the moment to rethink about them. In terms of the governance, obviously governance and accountability is very important, and transparency is important as well. Okay, next slide, please. Next slide. Yeah, thank you. So when we look at what is required in terms of regulation in Pakistan, Code of Corporate Governance in 2019, basically released in 2019, puts the onus on companies to highlight issues and ask the board to consider and make decisions on ESG. All right, so that's one thing. and it basically asks companies, boards to identify some sort of regulatory framework as well. So it's sort of an indication that they want companies to move towards using a framework for reporting as well. And in terms of when we look at it, how important reporting is in terms of recognitions, there are multiple awards now in Pakistan that are given for sustainability reports. And very recently, the Pakistan Stock Exchange has also added criteria for inclusive and sustainable development in its annual top 25 companies award. And basically, so they've asked for disclosure on 2 SDGs out of 7 SDGs that they've identified as important for companies. And they've also basically asked companies to disclose on the gender representation in the organization. So this is something that it shows that Pakistan is recognizing the need for sustainability reports and the importance of disclosure in these sort of areas. The next slide, please. So I think since I was supposed to present earlier, that covers it. So we're now on to, I'm just going to hand over to Arif again for the panel discussion.
Great. Thank you very much, Nazir, for that presentation, and just a reminder of what the findings from the SERB survey were. Let's bring in, Seher and Amber into the conversation so that they can participate and share their insights. Amber, first one for you, because I think Engro, like we heard, has been sort of preparing integrated reporting for several years now. Can you share with us, I mean, what were the main drivers behind Engro adopting integrated reporting here in Pakistan? Because it's not a mandatory requirement, so you did it purely voluntarily. What sort of prompted the management to adopt this?
Well, Arif, thank you, first of all, for having me. Thank you to all of you, in fact, and thank you, Richard and Nazish, for your very insightful presentations. There was some really interesting information that came out of that, especially in the survey, Nazish. There was some stuff that was, I mean, I'm definitely going to save that presentation. Very interesting insights. So, Arif, to answer your question, one of the things that we used to do before, from 2005 till, in fact, 2013, our reports were obviously the annual report, which is mandatory. And then we also had sustainability reports side by side with that. But, you know, you said it, Engro is such a diverse group of businesses that, mashallah, that we have such a number of results coming through. The annual report is great, but it doesn't really give the Engro story, if you know what I mean. You can't say that a business, and we certainly at Engro don't look at ourselves as a business that is just financially driven. There's so much more to a business's story, and Engro has a real focus beyond making the business run. You know, we don't feel our success can just be measured in the financial results. We needed to know what other impacts were. And I'll say it wasn't easy, because what happens is that the integrated reporting forces you to look at parts of the business that may make you cringe. You know, you take a really good long look in the mirror, frankly. You know, I mean, from the NO2, you know, carbon monoxide levels, real employee turnover, if you're, you know, also doing the human capital part of the integrated report, your impact on the communities around your businesses. You know, some of the numbers will really make you smile, because it, you know, you feel like, okay, yeah, you know, here we're on the right track. But then others will really make you think, okay, no, you know, that's not good enough. We've got to do better. And it really serves as kind of a 360-degree gap analysis for a business, doesn't it? Because you're looking at it from every different angle. So whereas the annual report is great for, you know, investors to see maybe how much they've earned, how the business is doing, and it is important, of course, it's no less important than any other aspect. But it just wasn't the whole story, and we really wanted to have the whole story represented. Since we were doing the annual report and sustainability reports separately anyway, we thought, hey, why not go ahead and put them together and do the integrated report? And it covers so much more than just sustainability also, because you've got the human capital, you know, obviously the environmental factors, the social capital, which is extremely important to us, having a foundation of our own as well. So there were a number of different factors, and then being able to, you know, actually derive certain objectives out of the results. That was very important for us as well.
Seher, Atlas Honda is a more recent sort of adopter of integrated reporting. I know it's a diverse group, but this particular integrated reporting is just for one of your businesses, isn't it?
Yes, thank you, Arif. Every year when we sit and discuss how this year's report is going to look like, there are number of things that we've been doing since the past few years. For example, in 2018, we went on to adopt the GRI standards. Before that, we were following the G4 guidelines. And then next year, when we sat together and as you've been mentioning, and Richard has also rightly mentioned, that since the integrated report gives you a holistic view of how the company has been creating value, and it links all the business model and the strategy and the risks and the performance of the company. So for us, we really wanted instead of giving the same information in two separate reports, we really wanted to get rid of the redundant information and put it together and follow a more comprehensive and rounded framework. So this was our motivation behind this adoption of the integrated reporting framework.
Right, and one of the questions I had for both of you is, once you've adopted this, and really you want, sometimes you put the cart before the horse, or you want the integrated report to drive behaviors, yeah? You want perhaps the integrated report, like Nazish mentioned, once you start measuring things, you then start managing them. So has the adoption of integrated reporting for Engro and for Atlas, has that really triggered a change in the management's also thinking on the interconnectedness between these 6 capitals we've talked about? And have you broadened the strategic KPIs as a result of that? Do you now have integrated KPIs? Amber?
Yes. So the short answer would be yes. It has definitely changed the way that the management views things, because you end up with such a holistic picture. Like I had mentioned before, it's a lot easier to derive strategy out of it. And of course, because of the gap analysis element of doing an integrated report, you really realize where you need to improve yourself. And then, of course, objectives can be set according to that. It's interesting, we've been doing the integrated report now since 2014. So we're currently working on the 2019 one, which should be out in about a month, hopefully. That'll be the 6th one, and still we're learning so much. We're definitely not experts. And very humbled that you've referred to us that way. But we're still learning a lot, and we are actually changing the way that we measure the social capital element of it. Because what we've decided to do is, on the basis of doing this year on year, going ahead and aligning our reporting with SDGs now. So the social capital element, and of course it'll have an overall impact on the integrated report, will actually be depicted quite differently this year than it has been in the past 5 integrated reports that we've put forth. So it definitely is insightful for us. It is a learning tool. It does help us determine what we need to focus on going forward. So yes, management definitely does take a keen interest in it, and in fact, in order to make sure that they're well vested in it, they are the ultimate approving entity, approving individuals as well. So all of the CEOs have some level of involvement in the integrated reporting as well across all of our numerous businesses. So very much a part of it. They see everything very transparently.
And Seher, for Atlas Honda, I mean, it's both Engro and Atlas have, whilst they are publicly owned companies, they still have sort of a particular family interest as well. So, where you've got a sort of an industrial family interest in a company like Atlas and like Engro, how do you ensure, Seher, that these non-financial targets, the targets around softer things like the environment, like social factors, like are you employing an equal number of women? Are you employing people from different ethnic backgrounds? Are those targets taken seriously?
Yeah, definitely. We might be a family business, but we definitely are, because we are the largest manufacturers of two-wheelers in Pakistan, we definitely look at the best practices and we really try and improve in whatever area we can. So definitely we have been trying to, uh, as you mentioned, discrimination. We have a very clear policy for ensuring that there's a very merit-based hiring, and that there are no human rights violated. So yeah.
Okay. One of the other questions I've had, and this is all open to everybody, because we're sort of living through this pandemic at the moment, the COVID-19 pandemic, and industries hit very hard by that. Demand for all products is at an all-time low, so people are not buying. The lockdown is bringing to the surface, the interconnectedness of financial performance with social and human impact as well. So on the one hand, we've seen across Europe, Richard, and across Asia, and especially in Pakistan, we've seen air quality indexes improve. So the environment's getting cleaner, the skies are bluer, there's birds singing, and because of that drop in industrial activity, the other softer factors are improving. So, my question is that, when the lockdown suddenly stops, and then every sort of industrial leader then scrambles to sort of improve their financial capital, are we still going to have, some sort of responsibility over the other capitals, especially after COVID-19? Because we've seen, that companies that haven't really saved up, haven't really built up their reserves, may not be able to sustain employees for very long. Richard, you want to share your comments on that?
I think you're right, and hopefully, we will retain some of these improvements in a post-COVID area, but I think what's important, and I think what integrated reporting brings out, is the long-term basis of sustainable business and building for the long term. And I think that's obviously got to include those environmental factors, for example, that you're referring to, Arif.
Yeah. And Amber and Seher, I mean, your companies are like everybody else. Employees are off; they're working from home. There's all sorts of cost savings going on. But once it lifts, what are the lessons to be learnt in terms of investment in the social capital following this lockdown?
Take this first.
Okay, I just wanted to mention that since all of the companies mention safe working environment as one of their objectives, so this is where it has become, the importance of this has become, it has increased manifold. And then again, the contributions towards the society to support groups that have been most affected, that are two different areas that has where the companies are focusing, and same goes for Atlas Honda.
Great. Health and safety, Amber?
Yeah, so from our part, Arif, there are a couple of things. So one is that our businesses have actually all continued to run through this because they are categorized as essential services. So we haven't had that gap, but I will say that we have on a very regular basis an address from our president, Ghayath Khan, and he is very clear with us that, this is not something that we should consider a passing phase and, it'll happen and then we'll just go back to normal, because that would be a shame. There's so much to learn from this pandemic. There's so much that we need to adopt to continue to remain agile. And it's a great opportunity to leapfrog as well, right? So there are a lot of lessons learned in terms of working from home, saving the transport back and forth to office, obviously the fuel consumption and emissions that would reduce because of that, all of those factors that you're counting, having an office running itself, having computers and so many plugs, obviously all the electricity consumption, all of the various pollutants that are involved in that. There is a huge, not only financial, but obviously environmental saving that goes with that. And I think the other huge learning that's come out of this is that we can actually do this. I know at Angro, we're actually very fortunate. I think we incidentally, about two and a half years ago, we began undergoing, in fact, a couple of different transformations, and they were predominantly hinged on tech. So what's happened is that we have a lot of things at our disposal at home as well, which, it hadn't been implemented yet. We had the ability to work from home and work remotely and offsite in different locations. It hadn't happened yet because, of course, it didn't have to happen. And as soon as it had to happen, thankfully, I think we are forward-looking in that sense. Not that anybody saw this coming, but we are fortunate to be able to continue with what is being termed the new normal, right? We don't plan to go back to exactly the way that things were. We don't think that would be wise from any angle. So we definitely are going to be taking a lot of learnings from this. And, we continue with the ethos that Angro has an undeniable responsibility to try to help this pressing issues of our time in Pakistan. And so you may have heard on the social front, we have a pledge also that was committed, a 1 billion rupee commitment on behalf of our chairman, Hussain Daud, the family, and the Daud Group and Angro Group. And we've been very active with that as well. So that's a lot of very responsible dissemination of funds and donations to try to do whatever we can to help through the pandemic so that when we come out the other end, we don't have to go backwards. We're hoping that when we come out the other end, we can actually go forward and use the learnings that we've taken and be able to progress with that.
Brilliant, thanks, Amber. I think, apart from the pandemic, we've also seen a lot of companies in the last week or two express their opinion on the race and equality messages as well. We saw many companies in the USA, Apple, Google, Netflix, they've all, tweeted about their support for, change in the systems so that, the whole Black Lives Matter campaign, they've all tweeted on it. So, when we see these things going on from afar, sitting here in Pakistan, we've got our fair share of, lives mattering. We've got different diverse ethnic groups. We got gender lives matter. We've got all sorts of lives matter. So when you look at things which are happening overseas, do you think this immediately prompts us as well to look at our own affairs here and say, look, we can't just simply be spectators, and look at things going on in other countries and the significant steps which are being taken. The corporates here, because they're such an important part of communities here, businesses, that they have to rise up to the challenge. Do you feel that Pakistani organizations are now sufficiently mature enough to rise to that challenge? Sahel?
Yeah, definitely. Everybody thought that after the election of Barack Obama, it was the realization of Martin Luther's dream. But now that we've seen with George Floyd's death, we've seen that there's a lot that needs to be done. And in our part of the world, I think there's a lot. Obviously, we have different diverse groups of people in here. So yes, companies need to realize and take a stand and ensure that the policies are implemented. At our company, at Atlas Honda, we've been very active, and we in fact encourage diversity so that it adds to the skill set of the company. So so yeah, definitely no discrimination based on any
Amber, on your
characteristics.
side, any messages from the Engro side on this sort of adoption of these lives mattering?
So we haven't honestly covered that yet, but I'm quite certain that in our next town hall, which would be coming up soon, our president will probably touch on this topic because it is sensitive and it is so impactful to so many people.
Yeah.
In Pakistan, unfortunately, we do have a stigma, about fair skin and, there being a certain beauty that comes with that perhaps doesn't come with the olive tone or the darker tones. And this has been, I mean, Bollywood inspired or what have you, with the whitening creams and all of this stuff. It is something that needs to be tackled, honestly. But I do feel, Arif, honestly, that at some point you've got to be able to, although we would support and we would have sensitivity trainings and coach on diversity initiatives and the likes, which we do at Engro very seriously. Although I will admit that the focus is currently more on gender diversity because that seems to be the more immediate need of the hour right now, till now. But sensitivity training, of course, covers all of these things as well. I will say that this is something that I don't think that the complete onus can come on corporate Pakistan or any corporations, anywhere in the world. There is a certain amount of responsibility, but boy, do we need to start at home. I think we really need to start this one at home.
Yes, definitely. We need to start at home and bring it to our own doorstep. Let me just look at some of the questions being asked. There's a question here from, is there any software or ERP available for integrated reporting? Anybody want to share their knowledge about any softwares being available to sort of to deliver integrated reporting? I'm sure there are, but I suppose for commercial reasons we can't mention them. But
yeah, well, perhaps Arif, I could just say I think integrated reporting itself is a framework. So so it's not very sort of it's not going to be particularly helped by us, or it's not very related to software. I think it's not it doesn't include, for example, what are the KPIs you ought to be including in your report. So it's a framework within which companies should do their own reporting and get their authentic message across about them. And so I think it doesn't really, I think, need specific software. I would have said. Right. I don't know what others think.
Right. Well, how is integrated reporting comparable to GRI? This is from Sabir Mahmood. So GRI is the Global Reporting Initiative, whereas IR, as Richard has mentioned, is a framework. Richard, would you like to take that on? Or you're on mute.
Yeah. No, sorry, I didn't. I thought. Yes, I mean, I think that's one of the key distinctions, is that IR is a framework and GRI is a more comprehensive reporting package. So it is not only a framework providing those principles, but it's also suggesting and has developed a number of metrics for different aspects from which companies can choose. I think the other main distinction between GRI and integrated reporting is that GRI is more focused on that wider stakeholder reporting and providing what they may need, whereas IR is I think more investor focused, more providers of financial capital, but recognizing wider it's a matter of emphasis between the providers of financial capital and the wider stakeholders, but that would be a difference between them as well.
Yeah, and they can be quite complex, GRI standards. They can be, quite large in terms of the amount of disclosures you have to make.
Yes, quite, and some of the metrics will be quite challenging to produce. So yeah.
So is ESG implementation easier in small, medium-sized businesses? So both our guests from Engro and Seher, they're not really small businesses. Nazish, would you like to take that one on? You're on mute, Nazish.
I think for all businesses, if you start measuring the metrics, whether you're small or large, I think ESG should be the same. It's similar, obviously. When you're looking at, Engro and there are quite a few businesses, I'm sure collating those results are difficult, as Amber has said. But with small and medium enterprises, if you're going to go to a bigger business, I think is the time to start.
Yeah, and I think nowadays, if you're going to raise money, if you're going to raise a loan or something, many of the providers of capital, the financial institutions, whether you're small or whether you're large, they would want to know about your environmental and social impact. They don't want to lend money to a small business, which has sort of child labor, for example, in its supply chain. So I think a lot of businesses, large or small, should be cognizant of ESG. Whether they are able to implement it is another thing.
Yeah, and the other thing is that I just wanted to add that in terms of suppliers now, a lot of the suppliers that are providing material to the large organizations, the larger organization also require a lot of documentation related to ESG. So I mean, it is something that is increasing, that we are seeing basically.
Yeah, just on the issue of supply chains, let me just ask Seher, because a lot of your vendors, Seher, within Atlas Honda may be small, medium-sized enterprises. Yeah. How does Atlas Honda sort of ensure, that the people within those vendors, the processes they follow, are sort of ESG compliant? I mean, you've got a Japanese investor, Honda. They would be quite concerned about, the practices of your smaller vendors. Yes. Oh, you're on mute.
Yeah, you're right, Arif. But we have a number of things that we do. Number one is, at the time of vendor selection, we have a proper process in which we see and we make the vendors agree to our guidelines, the corporate social responsibility guidelines that they are required to follow. So, and then on the yearly basis, we monitor, we select some vendors, and we go and check, and we ask them for the emissions data, and we even have awards for our vendors that achieve certain amount of reduction in their emissions. And other than that, we continuously collaborate with our vendors to improve their quality, and we help them develop themselves so that they are able to meet the standards that we're required to follow. So
great. No, that's fantastic. I think that's so important, because then you can play a real responsible role for SMEs and smaller vendors. Amber, is that the same with Engram as well?
Yeah, we have a similar processes. Of course, we do look into our vendors before we sign on with them, and with our partnering companies, especially, they're well reputed and they should have certain SOPs in place, absolutely, because that'll directly impact, obviously, our own calculations and standards as well. So it is something that we look into.
Yeah, and I think for ACCA as well, because we work with a lot of learning partners across Pakistan to deliver our qualifications, so we're quite engaged with them so that we can ensure that there's adequate teacher training, the facilities across our learning partners is of the highest standard, and and the entire capacity building efforts go on like that. Here's a rather difficult question, so I'll ask you, Richard. How would the targets be associated to SDG goals which aren't quantifiable? Now that's in terms of reporting them, is reporting them in the GRI, but I think leaving aside GRI, let's just look at the non-quantifiable elements of sustainable development goals.
Yeah. I mean, I think reporting on these capitals or against the Sustainable Development Goals will be a mixture of quantitative and qualitative reporting, and I think a mixture on each of the goals is good. So to the extent that they can be measured, that's good, and I think stakeholders are interested in measures. So quantification is good, but it's not always possible. I mean, some things are quite tricky. Biodiversity, for example, it's not as easy to measure as greenhouse gas emissions, and so I think talking about your strategy objectives and how you meet and work towards these different goals, or the effect on the capitals, is sometimes what you can talk about, and it is much harder to quantify some of them. But I think where you can, measurement is good.
Yeah, so where you can measure, but if not, a qualitative approach would be sufficient as well. I mean, at the moment, there's no sort of mandatory requirement for integrated reporting, and there's no sort of reporting template. So it does allow companies to sort of be a bit creative as well on how they report.
Yes, and I think reporting your strategy, for example, will nearly always be in will tend to be in narrative form, and you'll be and that's very important to indicate how you approach these things. But measurement is to go with that is very good. So I think the both are needed. Yeah.
Great. We've got a question here from Prem Kumar, who's asking, is there a specific course available to build capability around integrated reporting?
Well, in the slides I've provided, there is reference to ACCA's learning package, learning courses at, as I say, at different levels. So those who need in-depth, who are actually trying to write reports, you'll need a different level of skills and knowledge, and with others in an organization it might be briefer and higher level. So yeah, there are packages, and the IRC, the International Integrated Reporting Council, on their website will reference a number of learning material, including ours.
Great. So I'll ask Haroon to circulate that to all the audience members afterwards, so that they have linkages to these CPD courses on IR. We're at 4:30, so that's about wraps it up for today's session. I just really want to thank Nazish and Serb for their collaboration on this. Nazish, thank you so much.
Thank you, and I'm sorry about.
No, that's all part of it. And thank you, Nazish, for bringing along Serb's guest, Amber Ansari from Engro. Thank you, Amber. And also Seher Sumru from Atlas Honda. Thank you so much, both of you, for your contributions, and I'm sure we're going to come back to you again on future events as well on integrated reporting in ESG. To the audience members, thank you for your questions. We'll be circulating the various reading materials from today's session, and do remain engaged with Haroon to provide us your feedback on the session today. Thank you very much, and bye-bye, Richard. Thank you for your contribution as well, Richard. You still, it's early evening in London, so I'm sure you still lots to do from us. Thank you very much, and Khud Hafiz.
Thank you.
Thank you. Thank you so much, Arif. Thank you all for having us. Appreciate it. Yes.
Thank you.
Bye.
Bye.